Hello friends, in the series on the income tax cases, today we will discuss a very important case on the TDS provisions where the deductor has not deducted the TDS and has not paid the TDS to the account of the central government. The name of the case is Commissioner of Income Tax versus IJM Corporation BERHAD. And this case has been reported in 455 ITR at page number 357. The matter has been decided by Honorable Supreme Court and the date of the judgment is 8th May 2023. As all we know, the concept of TDS is pay the taxes as you earn. There are numerous provisions which imposes interest, penalty, prosecution on the deductor for not complying with the provisions of the TDS. One provision is that if the deductor do not deduct the TDS, then if the payment is to be made to the resident, then 30% of that is to be disallowed into the computation of income of the deductor. And if the payment is made to the non-resident, then 100% disallowance is there. But if the deductee produces the certificate of a chartered accountant that he has taken the income into his taxable income, then the deductor is not liable for the disallowance. But in that case also, the deductor has to pay the interest on the TDS up to the date of filing of the return of the deductee. The concept is that because the department is losing the interest up to the date of filing of the return of the deductee, because the deductee pays the tax when he files the return of income. Now, in this case, the moot question of dispute before the court was that in case the deductee has filed his return of income and has been assessed under section 143 subsection 3, and in that assessment it has been found that the deductee does not have taxable income and has incurred loss during the year, then whether in that case the department can charge interest under section 201 subsection 1A from the deductor. In this case, the department has collected the interest for the 4 assessment years, that is assessment year 2008, 9, 9, 10, 10, 11 and 11, 12 from the deductor. But it was the plea of the deductor that the assessee is not liable to pay the interest because the deductee do not have the taxable income. His assessment has been done by the income tax department and the deductee is incurring the loss and the department is not losing any tax. So there is no interest liability on the deductor also. When this matter came before the High Court said that in this case the department cannot charge the interest because the deductee do not have taxable income and more or less he has been assessed by the income tax department also. But as all we know that the department prefers to file the appeals whether there is any merit or not and goes on for the litigation. In this case also the matter came before the Honorable Supreme Court and the Supreme Court also upheld the order of the High Court that the department has to give the refund to the deductor for the 4 assessment years and also directed the department to pay the interest under section 244A on the amount of interest which is to be refunded by the department to the assessee. The court said that the department has collected this interest illegally and it should be refunded to the assessee. Friends, this case is very important as all we know that the TDS provisions are very stringent. They can trigger the litigation to such an extent then that the assessee has to lose a lot of resources in the form of money also, in the form of in the form of litigation cost and the cost of the effort which is involved in hiring the professionals and the human manpower of the assessee also in complying all the provisions. At the end of this video, once again I am repeating the name of the case. The name of the case is Commissioner of Income Tax versus IJM Corporation BERHAD, and this case has been reported in 455 ITR at page number 357. The matter has been decided by Honorable Supreme Court and the date of the judgment is 8th May 2023. Thank you, friends.